All right, what's going on, guys? In this video, we're going to be talking about market hours, when you could trade. There is a certain window that you could actually trade stocks and ETFs. You can see right on the screen, we got 9:30 a.m. Eastern Standard Time to 4 p.m. Eastern Standard Time. We'll go more in depth in a second because it's not just that clear cut. There's a little bit more to it. And this video is going to be mainly for my newer investors, people that maybe just started investing this year. You really don't know what's going on yet. Or maybe you haven't started to invest or trade yet, but you want to get into it. And there's a lot that you need to learn about. Don't be overwhelmed by it. Just take it one day at a time, one YouTube video at a time, and you'll be on your way. But to explain it simply, the market, just like a bank, you can't walk into your bank at 2 o'clock in the morning. There's not going to be a teller there. The bank's going to be closed. So you need to go back the next day when the bank opens up. And that's when you could deposit money or withdraw money. The stock market works very similarly. You can't trade stocks unless the market is open. And that's going to be for your basic retail traders. So this was a day chart. So we're looking at a daily candle chart for the S&P 500, which is the top 500 stocks in America. But we could jump over to a 15-minute chart or a 5-minute chart, and it looks a lot different. There are these, they're like yellow, but we'll call them these grayed out windows, and then this blue dotted line. So this blue dotted line represents each day. So this was yesterday, and then this was today. And you could see right here, this is known as pre-market. So at about 7 o'clock in the morning, pre-market opens and the stock will start to trade. You probably will not be trading this stock. This is institutional traders, stuff like that. So you don't have to worry about it. This is the big guys trading. Let's just call it that for layman's terms. Then at 9:30 in the morning, Eastern Standard Time. So if you're over in California, it's going to be 6:30 in the morning for you. But 9:30 in the morning, Eastern Standard Time, this is when you could start buying and selling stocks. And you could see, you could do this all day until 4 p.m. 4 p.m., that's the closing bell. That's when you can no longer trade, but there will be some movement. Again, that's going to be the big guys doing stuff after hours. But it's really not going to be as liquid, we'll call it. I'm not going to say as volatile because it can be very volatile after hours, but it's not going to be as liquid. There's not going to be as many buyers and sellers because this is where the mass majority is going to be playing. And chances are you don't even have access to post-market or pre-market trading. And then obviously when it comes to the weekend, you can't trade. So it's a Saturday or Sunday and you're thinking, wow, I really want to buy into this stock or this ETF, or I need to get rid of my positions. You're going to have to wait for Monday morning. You're not going to be able to do anything over the weekend. And it may sound funny if you already knew that, but there are plenty of people out there that don't know that, and that's okay. I was one of them way back when. I didn't know how trading hours worked, and I was trying to buy a stock on a Sunday or maybe buy a stock on a holiday when banks are closed. I'm like, why isn't this working? That's why. So that's another thing. Different holidays, the banks will also be closed. When a holiday is being observed into Monday, the banks will be closed and you won't be able to trade your stocks or ETFs. Now, let's say you are overseas. You could buy American stocks, but again, you need to trade between this window. So that may be in the middle of the night for you. And vice versa, if you are someone that is in America and you want to buy international stocks, you got to know when their trading window is and when you could buy into the stock. Chances are it's going to be sometime overnight. Now, you could see pre-market and post-market can be pretty volatile and there could be big jumps. Why does this happen like right here? Well, the stock, or in this case, the S&P 500, was trading throughout the day and then kind of fizzled out. Really didn't do much during the nighttime. But then in the morning or overnight, there was some bad news and that caused the stock to drop or the ETF to drop. This can also happen. Let's go back to the daily chart and let's type in, how about Apple? Everyone knows Apple. This could also happen during its earnings report. So if you're someone that wants to get into day trading or swing trading or options trading, people will hesitate on opening up trades or positions or options over earnings. You don't necessarily want to open up an option maybe here and then hold it for the next couple of weeks, because earnings is going to come out and that could create some crazy volatility. So if we zoom in here, we'll go to the 15-minute chart, and let's scroll back to Apple's last earnings, which is right here. You can see this crazy volatility. It was trading all day between $148 and $150, and then its earnings came out after market hours and it dropped all the way down to $142. And then it did end up trading back up. So maybe if you were in a short-term trade, it did go in your favor. But there are some other stocks that aren't as forgiving. Perfect example would be Netflix. If we look at Netflix, and I'm not talking about its most recent earnings, I'm talking about last year. Look at these massive drops. So during this one and this one, it had massive drops. So if you were in an options trade, or if you were in a day trade or swing trade, I should say, and you held it over earnings, you're dropping 26%. So that could go really in your favor if you're trading in the right direction, or you could get completely wrecked on it. So that's why you got to be careful when it comes to that. And then the other thing I want to talk about is something like crypto. So crypto is a little unique in the sense that there are no hours or no trading hours or a window. You could trade crypto all day long and all day and all night. You could trade it during the weekend. Doesn't matter if it's Sunday, 2 p.m. in the afternoon. You want to buy and sell crypto, you could do that all day long. The only problem, and so you could see, here's the dotted line that separates the days, but there's no windows for pre or post market. You could just trade it all day long and all night long. The only problem is, let's say you're buying and selling crypto and then you want to take out your money. That's when the hours start to become a little important, because maybe the platform you're using won't let you withdraw money, because at the end of the day, there's on-ramps and off-ramps for crypto. You can't just buy crypto out of nowhere. You need to use an exchange to buy that crypto initially. And then if you want to withdraw that money, then obviously you need to follow the exchange's hours. So some exchanges, you may not be able to withdraw your money in the middle of the night, or you may have to wait 1 to 3 business days, whatever that case may be. But besides that, when you're just buying and selling crypto, you can do that all day and all night long. So I really just wanted to scratch the surface here with a very simple thing that, again, when I first started, I really didn't know when the market opened and when the market closed. So we all got to start somewhere, and we all need to learn little things like this one step at a time. So I hope this video was useful. The website I used was tradingview.com. I'd highly recommend checking it out. If you're looking for some type of charting software to use, one of my favorite programs. But if you like this video, make sure to smash that like button and subscribe. And as always, I will see you in the next one.